When it comes to retirement planning, it can sometimes be hard to find topics that apply to everybody. Sometimes it's like, okay, well that doesn't really fit my situation, or I could see how that's relevant for some people. It's not relevant information for me. Medicare is that thing that applies to everybody. Doesn't matter what job you had, how much money you made, how much money you have saved. If you're retiring, you pretty much have to figure out Medicare to help us navigate that sometimes complex world. I'm talking today with Ryan Nutter. He's the founder of Cornerstone Senior Advisors. You can find him online at advisemedicare.net if you'd like to see how his team can maybe be helpful to you in navigating the Medicare world. But as I've said before, and I think I told Ryan in this conversation, I would like to know as much about anything, any topic you can think of. I would like to know as much about any topic as Ryan knows about Medicare. So we're calling this episode Almost Everything You Need to Know About Medicare, because I'm sure there's probably some topic we could have touched on and didn't. So without further ado, almost everything you need to know about Medicare. Well, I am here today with Ryan Nutter from Cornerstone Senior Advisors. Ryan is, I don't think compliance people like it when you use the word expert, but I'm going to say pretty close to an expert in Medicare. What I wanted to do is basically provide information for people who are trying to figure out Medicare. And this is like, you wallow around in this stuff all day, every day. So who better to talk to? Let's start with this idea that people have where it's like, well, I heard my brother-in-law has this and he loves it, or my neighbor has this. And so they're like fixated on this is how I need to do my Medicare, whether it's my supplement or my advantage plan or whatever. Mm-hmm. And it's just like anything else in retirement planning, right? Like you need to find the thing that works for you. I'm sure you've encountered this.
Yeah. So I like to tell people that Medicare is the air we breathe. We breathe in oxygen, we breathe out Medicare. So it is the world we live in. It's what we do each day. And I think Medicare, we've got baby boomers have been turning 65 for several years now. So you have on average 10,000 people every day turning 65 across the US making decisions on Medicare. And because of that, there's just been this influx of people getting into this business because of the opportunity with so many people, so many beneficiaries turning 65 and aging into Medicare. And all of that influx has just, I think, created more confusion because now you're getting solicitation from every angle. You have people knocking on your door, people calling you, texting you, you get mail every day. I mean, you don't realize how popular you are until you hit 65 and you're going on Medicare. So,
and it starts like
all the information,
maybe a year or so before you turn 65, they just start bombarding your mailbox.
It's so true. So true. Yeah. Yeah. And it becomes, it's all this information without any application. I mean, what do I do with it all? What is it? How does it? All of a sudden people are talking about G and N and F and all these things. And what are they? And advantage plans, supplemental plans, how do you make sense of it all? So yeah, our goal is to just try to be the peace in the storm. Like, hey, there's a lot of power that comes with just clarity and understanding. So, we always say we want to really simplify things so that our clients can make an informed and educated decision that they feel really comfortable and confident in. So just really trying to simplify Medicare, so they can make a confident decision. So what was the question you asked? I got
doesn't matter. That was a good enough intro. Okay. So let's think about. Let's assume that most people have the basic understanding of Part A, Part B. But maybe you can give us just like the 30-second overall, like A, B, D. How does that all fit together?
So I'm not good at 30 seconds.
Well, we'll give you 45.
Let me do my best. So original Medicare, when we talk Medicare, you have Part A and Part B, which a lot of people are familiar with. Part A is your hospitalization. All these years you're working and they're pulling money out of your paycheck for taxes, the portion of your taxes that went to Medicare paid for Part A. So Part A has already been paid for. You already bought it. People say Part A of Medicare is free and it drives me nuts. It was not free. You absolutely
Well, I have taken to saying Part A is free. Well, not free. You paid for it for the last 40 years. But
right.
I like your phrasing of it has already been paid for by you.
It's already been paid for. In fact, if you knew how much you paid for it, you'd probably be mad. But already been paid for, so you turn 65, you're entitled to it, you get it. It's already been paid for. So Part B of Medicare is what costs your first premium. This year, the base premium is $185 a month. That's what most people pay. That can go up based on income. It's called Income Related Monthly Adjustment Amount, or IRMA for short. So it's the government's way of saying, hey, congratulations on a successful career. We want more of your money, is basically what that is. But most people are paying $185 a month for Part B of Medicare. So Part A is your hospitalization. Part B is basically everything outside the hospital. Primary care doctor, specialist, emergency room, outpatient procedure, so on and so forth. That's original Medicare. A and B makes up original Medicare. So then you hear the dialogue about supplemental plans, advantage plans, things like that. So why are they important to know and understand? Why do you need a supplement or an advantage plan? Well, when you look at original Medicare, you still have quite a bit of out-of-pocket exposure. So for instance, your hospital stays. You're admitted to a hospital day one, you pay $1,679. That's your hospital deductible.
Who decided that very specific amount, by the way?
Well, I've said it a few times this year. That deductible will cover you for up to 60 days. The catch is it's not an annual deductible. So if you're admitted, you pay that $1,679. You're there a few days, you go home. Let's say 2 months later, you're back in the hospital. You're paying that deductible again. If you're in there over 60 days, now you have a per day copay of $419 each day. If you're in there over 90 days, it doubles. So you start to build up, and there's some out-of-pocket exposure with that hospital stay. Part B of Medicare, outside of the hospital, it has its own deductible of $257. It's separate from your hospital deductible, and it works differently because it's annual. So you're just paying the first $257 a year. Once that's been paid, well, now Medicare's kicking in. They're paying 80%. You're paying 20%. So anytime you see a healthcare professional, primary care doctor, specialist, emergency room, even your outpatient procedures, you're paying 20%. And the big issue, if you've heard people say, well, you need to get a supplement to cover your 20%, that's what they're talking about. And the biggest issue with that 20% is you have no max out of pocket with Medicare. So if you had some health condition come up where you're going in for regular treatment, so like cancer, let's say you have cancer, well, now you're going in for treatment several times a month for several months, you're going to keep paying 20%, and there's no stop loss. There's no ceiling to your out-of-pocket exposure. All of that is why people would get a Medicare supplement. They're also called Medigap policies because they fill the gaps of Medicare, or they go with a Medicare Advantage plan.
So let's drill down into that right there. Supplement versus advantage. Before we talk about what's going to be best for a particular person's situation, explain to us the dynamics of the different players in advantage versus buying a supplement. How does the federal government interplay with the private insurer and all this? How does all that work?
Okay, so let's start with supplement. So when you get a Medicare supplement plan, let me back up and just say what the government did is they designed 10 Medicare supplement plans. And they told all these private insurance companies, if you want to offer a supplement to Medicare, you can, but it has to be one of these 10 plans that the government designed. So these companies can't make up their own supplemental insurance to Medicare. They're going to pick which of those 10 plans they'd like to offer, and then they're going to decide which or how much premium they'd like to charge. But coverage-wise, so right now the Plan G is the most popular plan. Well, Plan G is a Plan G is a plan. I mean, it doesn't matter if you get it from United Healthcare, Blue Cross, Mutual of Omaha, Aetna. I mean, they all are going to offer it. They're all going to charge. They all have to abide by the government's rules, pay how the government designed that plan to pay, cover how they designed it to cover, but they're all going to charge different premium. So that's something you can look at and decide which company you want to go with and see what premiums they're charging. So that's the standardization of plans. Now, I said there's 10 plans available. In 2020, the government they discontinued the Plan F and the Plan C. Anybody that's been on Medicare prior to 2020, those are still options for them. But anyone new to Medicare after 2020, now there's 8 plans to choose from. And the G is the most popular because it's the most comprehensive. When you combine a Plan G with Medicare, it's going to kick in right where Medicare leaves off as far as your hospital stays go. That deductible that was very specific, $1,679, they're paying that for you every time. Your per day copays, your skilled nursing copays. Basically, when you combine a Plan G with Medicare, if you end up admitted to a hospital, all you're going to receive is a statement of benefits paid. I mean, it's dynamite coverage, honestly. Outside of the hospital, you still have to pay that deductible, the $257. Remember, that's an annual deductible. So you're paying that once a year. Once that's paid, Medicare kicks in, they're paying 80%, and your Plan G covers the remaining 20%. So when you combine a Plan G with Medicare, you have no network. So any healthcare provider in the US that takes Medicare is also going to take that Plan G. You have a one-time annual deductible of $257, and that's it. I call Medicare with a supplement easy insurance because Medicare is still primary. Okay, so when you get a supplemental plan like a G or an N or some of these plans, they are secondary to Medicare. So Medicare, if Medicare pays any part of a bill, that supplement has to pay. They don't have a choice. And what that means is you're not dealing with these private insurance companies. They're not dictating your care whatsoever. If they offer the supplement, they're just looking at Medicare. If Medicare paid any portion of a bill, then that supplement has to kick in and pay. So they just pay. They're easy. They're just like clockwork, and they just work. So it's easy insurance.
Yeah. The way I've already explained Plan G to people is like, yeah, it's going to cost you a little more monthly because, as you said, it's the most comprehensive, but it also gives you the most predictability, right? Because you know that basically everything is covered. So that monthly premium that you're paying is pretty much as you're going to pay for your care, unless you're just getting some kind of treatment that Medicare just doesn't cover, like some acupuncture or chiropractic or whatever, right?
You got it. That's exactly right.
So now compare that. You've got the supplement where you've got the federal government involved regulating it, and you have the private insurer that is essentially forced to provide this coverage without any kind of argument or debate required from you.
Right.
Now compare that to Medicare Advantage.
Okay, so there's a couple of holes with Medicare and a supplement. One, they don't cover, it doesn't cover drug coverage. Okay, so that's where Part D comes into play. So if you go with Medicare and a supplement, you have to go get a standalone drug plan. So there could be this year, I mean, in Kansas, we have 15 different drug plans available that you can choose from. You really need to plug in what medications you're on, how many milligrams you take, what pharmacy do you work with, and run that through all the 15 plans to figure out which one's going to be the best option. So drug coverage, Medicare with a supplement is really unique from what you're used to because your health insurance and drug coverage are separate. And then another hole with Medicare and a supplement is oftentimes people are just used to having dental and vision wrapped up with their coverage. Well, Medicare and a supplement do not cover dental and vision. So that's something that if it's important to you to have coverage for your dental and vision, you'll have to get elsewhere, which will be another premium. So those are some holes with Medicare. And I say that because that's one of the things that's unique with Medicare Advantage. So Medicare Advantage is also called Part C. They call Medicare Advantage
to clarify, you said a minute ago, Plan C no longer exists.
That's right.
So could this possibly be any more?
That's right.
Now we have Part A, Part B, Part D, which is different from Plan C.
That's a great distinction, John. Yeah, totally separate things. Yep, that's absolutely right. So Part C, but more commonly known as Medicare Advantage. They call it a different way to receive your Medicare benefits. So when you sign up with an Advantage plan, what happens is the government is going to hand responsibility for your health care off to a private insurance company. So whatever company you go with, they are now administering your health care. So what the government's going to do is you're going to continue to pay that premium for Part B of Medicare, which for most people is $185 a month. You're still paying that. The government's going to take that $185 a month. They're going to give it to whatever company you just signed up with offering the Advantage plan. So they receive your $185 a month. Also, the government's going to subsidize that company every month you have that plan. So that company is now receiving your $185 a month Part B premium plus subsidy from the government. So between the two, in a lot of areas with a lot of plans, they don't charge you any added premium. So Medicare Advantage, one of the biggest advantages.
Sounds magical so far.
Right. Well, yeah, it is.
Like, I don't pay anything for my Advantage plan. Well,
that's right. Yeah, I'm just getting warmed up. Let's keep going. So they're a lot cheaper. You know, some areas, the amount of subsidy that these companies receive, there's things that go into that. So star rating determines how much subsidy they receive from the government. And then also the county and the area that you live. Higher populated areas typically receive more subsidy. So There may be some areas where you see Advantage plan where there is some premium that they charge, but honestly, a lot of these companies are offering zero premium plans. You're still paying your $185 a month for Part B or for your Medicare Part B premium. That goes to the company. The Advantage Care, you don't pay anything above and beyond that. So yeah, that's one of the big advantages, is they are your cheapest option. Other advantages, they often come with dental and vision wrapped up in the plan, included in the plan. They've discovered over the years that dental insurance is really important to Medicare beneficiaries, and they've really made, in a lot of these plans, that they do have really pretty dynamite dental insurance. So you don't have to go get a separate dental plan, vision plan, because it's wrapped up in the Advantage plan. A lot of them offer over-the-counter benefits where you get a certain stipend every quarter to spend on over-the-counter items like Tylenol, ibuprofen, vitamins, Band-Aids. They have silver sneakers oftentimes, silver sneakers benefits, which gives you free access to the YMCAs and Genesis Health Clubs and Anytime Fitness Centers, more gyms than I could memorize. And it has drug coverage wrapped up in the plan. And so Advantage plans may be a little bit more like what you're used to with insurance before you hit Medicare, under 65 insurance, where it's all wrapped up. You have your health insurance includes your drug coverage. It comes with dental, it comes with vision and things like that. All of that's a benefit, because those are things you have to go get separate policies when you do Medicare and a supplement. Now, with Medicare Advantage, I always say there are 3 disadvantages to Medicare Advantage that we for sure want to cover and touch on before we pull the trigger. One is they are a network plan. Medicare with a supplement, again, any healthcare professional in the United States that takes Medicare also will take that supplement.
And so, that's going to be like almost any doctor you go to is going to accept Medicare.
That's absolutely right. Yeah, 99% of them will take it. Yeah. So with Medicare Advantage, it's a network plan. So not every healthcare provider accepts a Medicare Advantage policy. So before you ever pull the trigger on a Medicare Advantage policy, one of the things you want to look at is plug in your providers and make sure whatever plan you're looking at, each of your providers are in network with that plan before you pull the trigger. They are network plans. So that's one thing. Number 2, there's more out-of-pocket exposure with an Advantage plan than there is with Medicare and a supplement. So it's more of a pay-as-you-go plan. So it may be zero premium, and then it may be a zero deductible plan. It may be only copays. Maybe they have a deductible. It's $200, $300, $400, $500. It depends on the area and the plan you're looking at. But you go to a primary care doctor, these plans are typically zero copay. You go to a specialist, you might pay $20 to $50 per visit in a copay with a specialist. If you end up hospitalized, you're probably going to pay a copay of anywhere from $300 to $400 per day for the first 5-6 days you're there, and then zero for any additional days after that. You end up in the emergency room, $140 copay. Outpatient procedure, you're going to have a copay. So each time you're going and using these plans, and I'm just making these numbers up because they're going to vary based on county and area, but you're going to pay as you go. So they're pay-as-you-go plans. So they don't have premium. They do come with the ancillary benefits, but there's a network to pay attention to, and you are going to pay as you go. They're all going to have max out-of-pocket. So when you go back to what we started this conversation with original Medicare, where there's no ceiling to your out-of-pocket exposure, there's no cap. Well, that's where Advantage plans can help you, because there is a ceiling. There is a cap. If you did have to go through cancer treatment, you'll have a max out of pocket. Maybe it's $3,500, $4,000, maybe it's $5,000, but you do have a ceiling to where once you hit that, you don't have any costs the rest of the year until the next calendar year starts over January 1. So there is a ceiling. So I said there's 3 disadvantages. 1, it's a network. 2, you do pay as you go with a little bit more out-of-pocket exposure with Advantage plans. The 3rd disadvantage with the Medicare Advantage plan goes back to the government handing responsibility for your healthcare off to the private insurance company. So what that means is that company is now dictating your care. So if your healthcare provider wants to prescribe something for you, they have to get the green light from whatever company you signed up with. So that's a situation where if your doctor says, hey, you need to have a knee replacement, well, that company could say, time out, let's try 3 months of physical therapy before we approve this knee replacement. So healthcare providers are not as big of fans of Medicare Advantage policies, because they have to jump through more hoops to get things done. So typically they pay slower than original Medicare. Then they're negotiating their own contracts with these facilities. So they may not be getting paid the same amount that original Medicare pays them. And then they have to jump through more hoops and the coding that they have to get just right and all these things where it's just harder on the doctor to get things done. So those are the things. So doctors are not as big of fans because of those things. So those are the three things to pay attention to with the Medicare Advantage policies. I always summarize it. Health insurance, if you think about it like a peace of mind where it's something you have in place in case you need it, you hope you just never have to use it. Which of those options really gives you more of a peace of mind? Because some people, like you were saying, John, would rather pay that more monthly premium and just know they don't have to deal with network. They don't have a private insurance company dictating their care. They know exactly what to expect with their out-of-pocket costs, and it's just easy.
Yep.
That's Medicare with a supplement. Some people who sleep at night knowing how much premium they're paying, they like all the because with Medicare and a supplement, you're paying more premium for the supplement, for the drug plan, for the dental and vision coverage. So it adds up. You don't have to pay those things with Advantage plans. So these people like the idea of the cheaper option, the network, the copays, the private insurance company involvements, what they've had all their life. It doesn't intimidate them. And so then Medicare Advantage is more appealing.
It's probably just, it's much as anything, it's just a risk management and predictability thing, right? Where it's like, if you never go to the doctor, you would have been better off to have had the Advantage plan where you're not paying monthly and you never needed care. So you never pay anything else. Mm-hmm. But then once you have that hip surgery or whatever, now maybe we're better off in the supplement plan. Is that too simplified of a comparison?
We've hit the point where across the U.S., 54% of Medicare beneficiaries now have an Advantage plan. So they're sure not going anywhere. A lot of people have them and love them. And I have clients that have actually used them and had situations where health issues come up and they're really pleased with how low their out-of-pocket exposure was. But that's right. Yeah. I mean, you're spot on, John. I mean, because you're going to go, you have a hip replacement, you're going to pay a copay for that. Well, first you have to get the approval for it. That may take a bit of time. And then you're going to go in and pay a copay for that outpatient procedure. You're going to pay copay every time you go in to see a physical therapy. And so those copays can start adding up for you.
So basically, if I'm the type of person that's willing to take a little risk, deal with a little headache, and try to save some money by taking those risks on, okay, maybe I go the Advantage route. If I like the predictability, the peace of mind, the ease of everything just being taken care of, I'm probably going the supplement route. So let's think about specifically on the supplements. Mm-hmm. Let's say you've decided, okay, Plan G is the thing for me. Mm-hmm. And I can get it for $127 a month from this company, $123 from this company, $131 over here. Mm-hmm. What else are we comparing in these companies other than just, all right, well, what's the absolute cheapest one I get? This one's $8 a month cheaper, so I go with that. Like, what are the other variables we should be thinking about?
So there's a couple of things that I look at with these supplemental plans. Honestly, we're going through a little bit of market disruption in both supplemental space and Advantage space, which we can dialogue on a little bit. But we're seeing rate increases across the board across the U.S. with these supplemental plans. Let me jump into that for a second, if you don't mind. I've been summarizing these rate increases that we're seeing. They're a little bit above normal for the supplemental plans. I've been saying there's 3 reasons for them. Any one of the 3 reasons would cause rate increases. You're combining all 3, so we're seeing some little bit of disruption with premiums right now. Number 1, there's this inflation. I'm just going to summarize it with inflation. So at the start of 2025, a turning 65-year-old Plan G for a female in Wichita, Kansas, where I'm at, was like $9 per month more than what it was 10 years ago. So these supplemental plans just haven't been keeping up with inflation and the rising costs that we're seeing everywhere else. So there needed to be a little bit of a correction. That's number 1. Number 2, there's been this post-COVID impact. It's not fun to talk about COVID. COVID's 5 years ago, but what happened during COVID is Medicare beneficiaries anything that was a health issue but not life threatening, they were putting it off. So your hip replacements, knee replacements, cataract surgeries, things like that, they basically, hospitals were full, they were putting them off. So 2020, 2021, they weren't having them done. Well, then 2022, 2023, you have your typical claims submitted in a year, plus everyone playing catch up with procedures that they've been putting off. That put a lot of pressure with loss ratio on these supplemental carriers. All of their rates lag 12 to 18 months after they see those loss ratios. So the last couple of years, we've been seeing real bumps in premiums because of loss ratios from 2022, 2023. That's number two. And then number three is under 65 health insurance is getting worse. So, your group plans, your individual plans, deductibles are going up, max out of pockets are going up, and premiums are going up. And so, again, people are putting things off. And so the most expensive group of people for Medicare beneficiaries has become the 65 to 69-year-olds. Because they've been waiting to have that knee replacement surgery until they hit Medicare where they have better coverage. So all of those things combined, there was a nationwide industry average this year of a 12% increase on supplemental plans across the U.S. this year. And I have a buddy of mine that is in DC at least once a quarter talking Medicare with all the lobbyists and all the things. And he feels like it's going to be a few years of correction before we see the dust settle with these supplemental plans. So there may be a little bit of expectation people should have of higher increases each year than we would want to see on the supplemental side. One of the things, so that's a kind of a big, that's not what you asked, but one of the things that we look at with these supplemental plans, I look at market penetration. How many beneficiaries do they have in your state on that plan? So companies that have more people on a plan, one, that means they should be in for the long haul. We're not going to see them get out of the market. Two, they have more premium coming in, so that helps them absorb claims easier than a company that only has a few hundred people on the plan. A company that has 20,000 people on the plan should be able to absorb claims a little easier, ideally, than a company that has 200 people on a plan. So those are things we look at just to help try to create some, or hope for some stability. Honestly, the expectation for supplemental plans is you should expect an increase each year. These plans in a lot of areas, there's two reasons your rates go up. The biggest is loss ratio. No company is going to take a loss. If they're paying a bunch of claims, they're going to raise rates to keep up with those claims. The other, depending on the state, are these companies are attained age policies, which means they're going to celebrate your birthday every year by raising your rates. Happy birthday. Here's 4%, 5% rate increase. So you're going to see a couple reasons for rate increases. I always tell people when you get to the point where you're seeing double-digit percentage increases, that's the moment in time where you probably should call timeout. Let's reassess. Maybe we need to move to a different company because they are standardized. A plan G is a plan G. That's a really long-winded answer, John. Hopefully that was helpful for some people listening to, but yeah, in my experience, once those companies hit the 10, 12, 14, 15% increase in 1 year, that's usually going to become the trend with them, where they're not going to go backwards. You're going to see bigger increases going forwards.
So my last question was going to be, and I think you halfway answered it there, was like, all right, you're already on Medicare. You're kind of like ensconced in what you've been doing for the last few years with your supplement or your Advantage plan or whatever. And it's just easier maybe to stay on autopilot and keep doing it. But other than assessing other options when you get a rate increase, what are the other things, like once you're already on Medicare, that you should be assessing on a somewhat regular basis of, is this still the best plan for me or not? Or is cost really the main thing? So
cost is a big player. Yeah. I mean, when you hit Medicare, typically you're on a fixed income. The way to get a raise is to cut costs somewhere, right? So cost is a big player. That's something to pay attention to. A lot of times people are changing their supplement every 5-6 years. That's kind of a trend. What's going to be really important for Medicare beneficiaries this fall, there's an expectation of a lot of disruption this fall with Medicare. So one thing we haven't gotten into quite yet is the Inflation Reduction Act that was passed a few years ago. There was a lot of language in the Inflation Reduction Act that's affecting Medicare drug plans, which went into effect January of this year. Without getting into the weeds, the long and short is these insurance companies are now responsible for far more costs for medications than they have been in the past. So the expectation last year was we were going to see premiums triple. We were going to see formularies shrink. We were going to see companies getting out of the market. And we saw a little bit of that, but last year they said basically timeout. There was about to be so much disruption. They said it was something like $47 billion in subsidy that they threw out at these companies that are offering these drug plans. Basically to limit the disruption. Well, there's more changes being made that was in the Inflation Reduction Act bill in January of 2026, where they're trying to lower costs for the 10 most expensive medications for Medicare come January. So all of that's having an impact on these companies. So now we're kind of expecting more of that turmoil disruption. I say all that, John, that's a long-winded way of saying it's going to be really important for any Medicare beneficiary that has a supplement and a standalone drug plan to really pay attention to your annual notice of change letter that you're going to receive in September or October, because there are going to be plans leaving the market. I do think formularies are going to shrink. They're going to cover less medications. I do think premiums are really going to go up because of that Inflation Reduction Act that was passed a few years ago. So it's going to be really important to pay attention to that. All of that is also affecting these Medicare Advantage plans. Medicare Advantage plans have really prided themselves on having better drug coverage than standalone drug plans. And so they take some of that subsidy they receive from the government and apply it to Advantage plan, or to the drug coverage with the Advantage plan, to help limit some of that cost for the beneficiary. Well, they're having a harder time with that now because their cost for medications has gone way up. So, I had a guy describe what's happening with the Advantage plan market for this fall. He's saying that companies are now focused on profitability more than growth. And so we're seeing a pullback on numbers of plans offered. We see a pullback on benefits and things like that. So this is going to be really important for any Medicare beneficiary, whether you have a standalone drug plan or an Advantage plan, to pay attention to that annual notice of change letter that you receive and see what other options you have going into 2026, just so you know that you have the plan that makes the most sense for you going into next year. Let me keep going. I'm getting kind of long-winded, but just when you talk about some things you should pay attention to in the annual enrollment period that begins in October, Medicare supplement plans, you can actually change any month you want, anytime you want. So you can, when you're getting an increase in the middle of the year, you can see what other companies are out there offering that plan G, plan N, whatever plan you have, and make a change in the middle of the year to cut your costs. So the annual enrollment period, which begins October 15th and goes through December 7th, that's the only time of year where you're able to make a change for your drug plan, where you can see what, if the drug plan you have now is still what plan you want for next year, or is there something that's going to work better with your medications. It's also the time of year when you're able to change your Advantage plan. You can go from one Advantage plan to a different Advantage plan, or you can even go from an Advantage plan to a Medicare supplement plan, but you are going to have to answer health questions, go through underwriting to get that supplement. Now, you don't have to be a marathon runner to get approved. Blood pressure, cholesterol, thyroid, reflux, these medications it's fine. So don't feel overly intimidated by the underwriting and things like that. But hopefully that is helpful. That's a lot of information. Hopefully that's a little helpful.
Well, the good news is we recorded it, so you can rewind and
Sure.
catch it again if you missed some of the details there. Suffice it to say, I think it's very clear. I would love to have an expertise in anything that's equivalent to your expertise in Medicare. So thank you very much. If people would like to get some help from you, how would they find you?
Yeah, so our office phone number is 316-260-3331. Our website is advisemedicare.net, advisemedicare.net. Or you can email us. office@advisemedicare.net is an email that will go to our admin. Make sure we get in touch. So any of those ways would be great.
Yeah. And I think you said you're in like 30 different states you can operate.
I am. Yeah, we're in and I do have clients in North Carolina. That's one of them.
Yeah.
So yeah, we have pretty far reach.
Well, thank you, Ryan. A wealth of knowledge, a font of knowledge, some people would say if they wanted to sound really fancy. But appreciate you jumping on.
Thanks, John. Hey, thanks for having me. Really appreciate it.
Carolina Wealth Stewards doing business as Rosewood Wealth Management is a registered investment advisor in the state of North Carolina. The material presented is intended to be general information and should not be construed by any consumer as the rendering of personalized investment advice.